Hi guys, welcome to this video about trust investments. Okay, so one of my students tried to teach me how to pronounce these words because I'm an accounting person. You guys in law, you have a way of pronouncing these things, and honestly, I am not so good at it. So I won't really try to say things that I don't know of, but there's just a tip or just a hint about how to get around these two very long words. One, they're saying it's section 78 2A of the Attorneys Act, section 86.3. Then the other one is section 78 2A. It's almost the same thing, but you guys, you know better. I'm not gonna insult your profession. You guys know better. But the only way that I can just advise you when you're dealing with these two things, right? You just have to be sure which one is which, right? So when you're dealing with 86.3, the first one. When you're dealing with 86.3, what you have to understand is who makes the investment decision. That's the question that you just have to understand. There are just two questions you have to understand when you're given a question relating to these trust investments. The first thing that you have to be on the lookout for is who makes the investment decision, right? So if the investment decision is made by the client, if the client instructs us as the attorneys to make an investment on their behalf, if it's the client instructing us, right? If it's the client instructing us to make the investment, we have to we have to the interest end on that investment. Sorry, if the client instructs us on making the investment, the interest end on that investment, 95% goes back to the client, then 5% goes back to the legal practitioners fidelity fund. Legal practitioners fidelity fund. So it's just something that you just have to understand. They are never, it's not like they're never going to do it. Maybe you might be fortunate on one day that they ask you nicely. But most of the times, they don't really specify. This is section, what of section, what, this is section, what of section, what. What they're most likely going to ask you is, they'll give you a scenario and they tell you about the person who invested, right? They can say WX or ABC attorneys decided to invest, right? Meaning it's the firm which is investing. And if it's the firm which is investing, we are now dealing with this 86.3, right? And when you're dealing with 86.3, 100% goes to the Legal Practitioners Fidelity Fund, LPFF. So that's how they catch out people when they're dealing with these questions about trust investments. Be on the lookout for them. Be on the lookout for them. I won't really go deep into the journals, the debit, credit, wara, that is easy. But I just want you to have an understanding, right? Have an understanding that when the money is entrusted to the firm, right, and the firm deems the money excess, that's basically what's going on here. When the firm has deemed the money excess, then the firm decides and says, okay, we're going to invest for an interest, right? The interest that is going to be accrued on that investment is going to be 100% of it is going to go to this LPFF fund, right? But if it's the client, so you have to be careful to listen to the question. Please, listen into the question. If the question is saying the client instructed so and so to do so and so, be sure to use this, not this. And one more thing in conclusion in this video, one more thing that I would want you to be on the lookout for. They also tend to say no payments have been done in this regard, right? If no payments have been done in this regard, it's an accrual, right? It means like we still yet to do it. Basically, we still yet to make the payment. So if we still yet to make the payment, it means this account becomes a liability, right? It will be a liability, meaning it is going to be a credit side entry. So as you're going to work on your book, on your study guide, you're going to see exactly as I'm telling you, it's going to be a credit side entry. But just pay attention. The most important thing to know when you're dealing with trust investments, the most important thing to know is who made the investment decision. If it's the firm, 86.3. If it's the client, 86.4. You finished. So I don't want you to have any confusion when it comes to trust investments. It's a very brief chapter, and I really expect you to do your best and get it right. But please, these are usually simple marks, exam assignment setup, whatever they decide to bring on to you. Just make sure you know the drill. Listen to the question. Ask yourself, okay, who's making the investment decision? If it's going to be the client, 86.4, which is 95.5%, right? If the client is not going to be involved in that decision, please do the right thing. Use 86.3. 100% of it is going to go to the legal practitioners fidelity fund. But besides that, it's not really a very challenging topic. It's not really a very challenging topic. You just have to make sure that you understand who's doing what. Then from then onwards, you can just build from it. And you enjoy your module. This is one of the most enjoyable modules, financial accounting, the one for our friends, the lawyers. Thank you so much for spending time on this video. Cheers. Thanks again for watching the video. Remember, like, subscribe, share. All the best with your studies.